The Fed is talking about yield curve control. Is this going to affect the price of gold, and is gold going higher? We'll take a look at what's going on with gold stocks and gold ETF funds, so stay tuned. Thank you for watching. This is Richard with Wisdom Investor. The Fed is currently talking about yield curve control, which suppresses interest rates, and this could be good for stocks. Now, a lot of investors enjoy investing in gold. Some just enjoy investing because they like trading gold. Others use it as a hedge against inflation. And then others are wanting to be involved in gold in the event that the economy crashes. So we're going to take a look at how this yield curve control can affect interest rates. So stay tuned. I recently ran across this article here by Jim Nieuwenhuis of Voima Gold. Says why yield curve control by the Fed will be bullish for gold. On Wednesday, Fed Chair Jerome Powell stated he is considering yield curve control. Previously, in the 1940s, when the Federal Reserve controlled the yield curve, it created deeply negative real interest rates. If repeated today, this would cause the gold price to skyrocket. So back in the 1940s, the Fed did this one other time. They suppressed the yield curve, called yield curve control, and it had an effect on the market. So basically what they're trying to do here is keep the long bond from interest rates going higher. The short interest rates are already low, but they want to keep the interest rates from rising. Matter of fact, they say they want to keep the interest rates down through 2022. So back to the article here, said the Fed and the Treasury negotiated peg bills, 3-month bonds at 0.375 and long-term bonds, 25 years, at 2.5. All other yields of government bonds were held constant as well. He goes on to say the growth in the monetary base caused heightened inflation to consumer prices. With nominal interest rates held down, the inflation peaked at 20% in March of 1947. Keep in mind, when inflation increases with low interest rates, the dollar is devalued and gold prices, hard assets, commodities increase in value. The article goes on to say you might wonder if U.S. citizens rushed to buy gold when real interest rates were negative in the 1940s. It says here they didn't, because private gold ownership was prohibited in America from 1933 until 1974. So investors back in the 1940s, they could not buy gold, but we do have that opportunity. So we're going to look at some gold ETFs, also some gold stocks. So we're looking at a chart of gold right now. This has been going pretty flat. Right now it's trading about $1,736. Keep in mind, when the market collapsed, the price of gold also came down. Many people may think that gold goes up in times of a stock market crash, but it actually goes down. People are liquidating any type of fund they possibly can in those types of situations. Therefore, the price of gold can sink like it did back in March. People selling assets. Now, after this crash in March, you can see the value of gold went up pretty heavily. The Fed was lowering interest rates. Therefore, investors in gold were anticipating inflation could drive the price of gold even higher. But since it's kind of leveled off here, our goal here is to find the best place to buy gold. Ideally, I think it would be nice if we did get a little bit of a sell-off in gold and kind of get a reset in the price, and then as it launches higher, catch hold of it at that point. Here's the GDX Gold Miners. Again, they had a nice push up off of the lows. Again, gold miners, these are stocks that are mining gold. They also collapsed in the market crash. So right now we're getting a little bit of a pullback off the highs here, but it's just a gentle pullback. Again, ideally, if we could get a little bit lower pullback, we could catch this at lower levels here the next time gold starts to launch. Now, the way this is looking right now, it looks like this is more of a resting phase or pause for GDX Gold. Here's our support and resistance on GDX Gold Miners here. We've got Resistance around 34 on this. It's currently around 32.5. And then we have support down here in the 30 to 29 area. So those would be the likely areas where at this time that this would possibly move down to. Let's look at some stocks here we want to keep our eyes on. Newmont Mining is the #1 held company in the GDX Gold Miners. #1 weighted company. Now it took off here in March also. It's had a tremendous move. Now we're backing off here. This would be the time to keep your eyes on Newmont Mining. Barrick Gold also had a nice move off the lows, and now we're backing off. So we want to keep our eyes on Barrick Gold. Franco Nevada Corporation, another one, had an excellent move off the lows. So these are 3 stocks here we want to keep our eyes on. Franco Nevada is symbol FNV as in Victor. Another good stock here is Agnico Eagle Mines. They've had an excellent move off the top, and again backing off just like the other stocks that we've looked at here. That's a symbol AEM. Let's take a look at GDX Gold ETF and volume. Of course, you can see major selling here and then buying back to the upside here. So let's look at some of our technical indicators here. The force index is green when it's going up. Right now it's in the brown. We may be getting a little bit of a pullback, but that's really pretty light compared to the way it was in March. The on-balance volume is also moving to the downside, which is good. I think, again, we want to find a low point where we can buy this before it takes off. And if you look at some of the other volume indicators, they're pretty much going sideways here. Another good ETF, here's the Gold Miners Junior, GDXJ. So it's holding right below resistance here at around 44. And we have support at 42 and 40. Again, a pullback to these support levels would be good for a good buying opportunity. Let's also look at DBC. D is in Delta, B is in Bravo, C is in Charlie. That's a commodities ETF here, commodities index. And this is moving up. As we've said, inflation is going up. So commodities and hard assets seem to be moving higher. So DBC is an ETF that you could also buy that covers a broad area of commodities. A pullback on this too, I think, would be helpful. So right now, what we're looking for is if we can get some kind of a pullback in the gold stocks, gold ETFs, we can get a good buying opportunity. If inflation increases, interest rates stay lower, and they also do the yield curve control, we'll be ready to buy gold stocks when they take off to the upside.